what you're making of the oil market at the moment, the fact that we're looking ahead to an OPEC that's not on the case. What are the dynamics for you?
Yeah, so today's decision to not hold the meeting was interesting because I think there was a little bit of an undercurrent behind the market where we were looking at the data coming out of India just in terms of consumption dropping about 10 to 12% in May and looking like 20% maybe in June with the way the virus is tracking, and thinking, okay, are they still going to stay the course? OPEC has really enjoyed using the element of surprise as its tool of choice over the last 2 or 3 meetings. And there was this thought like, oh, maybe they surprise and say, we're not going to move ahead with our scheduled increases. So behind the scenes, there was kind of that thought in the back of most traders' minds. The fact that they decided to move forward with the output increases this month really gave, I think, people confidence in their way they're looking at demand and the way the rest of the world is tracking, in that the hiccup we're experiencing in India is a stall of the recovery, but not necessarily a change in the trajectory of where we end up. And you cited UBS saying that they think that there's going to be draws of 1.5 million barrels by the end of the year. That's very consensus at this point, that the market will be undersupplied and that we will take inventories back down to that 5-year average. So behind the scenes, I think this was actually, even though it was a nothing burger in terms of we're going to cancel it, it actually did have some nuance to it.
The nuance is definitely there. I am curious about positioning long term, particularly when you look at the demand side of the equation. I know a lot of people are focused on some of those refined products, and maybe that the pickup in gasoline demand and other sort of refined demand hasn't quite gotten to the levels that would justify some of the pricing. Where are people sort of positioned right now?
So that's a great question, and the positioning reflects that exact concern. There's much more length in the WTI and Brent markets as opposed to gasoline markets. And a lot of that has to do with the fact that this is an uneven recovery, and specifically that jet fuel and other types of fuel demand haven't come back as quickly. That's changing, though, as we see TSA numbers for the United States are remaining above 1 million. High frequency mobility data is starting to show driving numbers are picking up. But this, again, is very US, Europe, and China based. And we have that problem with the emerging markets really falling behind on the recovery. So those refined products, they bear the brunt of that lack of positioning. People are really using TI and Brent to play the upside.
Talk about that unequal recovery, because it's interesting. UBS also had a note out this week really mentioning that as well, where they're highlighting demand in China is still about 10% lower than it was in the first quarter of 2019. So they're not even quite back to the levels that we saw pre-COVID. Are you seeing that as well?
So that's an interesting data point. I see mixed data on that, and most of the reports that I'm looking at, or the numbers that I'm seeing, have China data almost back to that 2019 level. So a lot of analysts do see that it has retraced most of it. The U.S. has not, so we're still lagging, but China is really has hit that point, and I think there is at least some concern that it'll be hard for them to continue to accelerate from here. So if we're looking for catalysts that keep us going, China has been the major engine that just keeps chugging, and the US has been right behind it. And if the momentum and the rate of change, which I know you guys like to talk about, although talk about it in terms of yields, but if the rate of change starts to slow down, as we bring back additional supply from OPEC and the US producers kind of come back a little bit, do we continue to see the type of sustained momentum higher in the commodity? And I think that's why most people think we chop around here, as you heard the BP CEO say, from 60 to 70. OPEC's kind of taken out that downside, but there are limiting factors on the upside as well.
Do not get Taylor started on rate of change. Meanwhile, Rebecca, though, we don't want to get you started on what you just said there. What we heard from Mr. Looney, of course, of BP, what you're hearing from companies as we hit earnings. You're looking out for CapEx, I guess?
Yeah, I mean, I think what everybody's looking for is this maintaining of capital discipline from the companies. I'm not going to go out and start drilling and spending money. I'm going to return this money back to the shareholders in the form of buybacks, dividends, buying back debt, cleaning up my balance sheet. And CapEx kind of plays into it's their leading indicator of how they're positioning for the future. So I think it's going to be critical. And I think that's where the investors really want to see companies heading. in this upcoming quarter, and so far they've done that.